Hi, I'm Adam Chapnick with the Security Token Academy. Today I'm pleased to bring you an expert interview with Archax and Smartlands. Archax is a new regulated institutional-grade exchange for trading asset-backed tokens, like security tokens. Smartlands is a blockchain-based platform for crowdfunding real estate investment. In this expert interview, we'll be speaking with Matthew Pollard, the co-founder and CFO of Archax. And also participating in today's interview is Arnoldas Nauseda, the CEO of Smartlands. Both will join us from London. But first, let's learn a little more about Archax.
Digital asset trading is going to explode.
The digital asset trading future has the ability to completely disrupt trading. All assets in the future could be traded between individuals, between entities.
At the moment, digital assets are largely been focused on currencies. But I think going forward, there's lots of different ways in which digital assets can be monetized.
Once you accept that most assets around the world can be tokenized, you start seeing the adoption in everyday walk of life activities. You realize that there is something big happening here.
The digital asset space has really matured in the last 12 months, and proof of that is a person like myself coming from the hedge fund industry, taking an interest in the space and thinking, how do we get involved?
The reason that institutions are not so involved in crypto trading at the moment is the lack of transparency within the marketplace.
They need to see processes and systems which either are regulated or act as if they are, and are really, really robust on their technology, their custody, and the way they perform, particularly with regard to compliance.
If the crypto market became regulated, institutional investors would flock towards it. The size of the market is massive, and their clients feel that they need to get a share of this.
Archax is aiming to be a top-tier, regulated, institutional-focused digital asset exchange that differentiates itself from the current players by being purely focused on institutions and their clients.
We want to be a respected institutional-grade player that is headquartered in the City of London. And we want to build an exchange and have a custody solution that is institutional grade and segregated, where institutions and accredited investors feel comfortable buying and selling digital currencies.
Archax is a team of credible financial individuals that have worked in a regulated environment their whole career.
The vision for Archax is to bring the traditional trading experience into the digital asset / crypto world.
The key excitement at the moment is how digital asset trading is going to integrate with the current financial infrastructure.
We're dealing with tier 1 software providers that have been providing matching engines to the traditional financial markets for many years. Our platform is going to be transparent, it's going to be delivered in an extremely regulatory, safe, secure way.
All of the participants on the exchange will have gone through anti-money laundering and know your client checks.
Archax is very exciting because it's in one of the fastest moving industries in the world.
Anyone that you speak to starts being skeptical, they gradually get more excited, and before you know it, they're fully engaged in the space and start to see the possibilities.
The future is massive. This will grow and grow and grow.
It's an incredibly exciting space to be in.
We have the product, we have the people, we have the systems, we have the thinking, and we have the vision that we need to get there.
We've seen exchanges in the digital asset space pave the way for where we are today, and that's very important. But for the institutions to come in, we need evolution. Archax is the next stage of that evolution.
Now, let's find out more about Smartlands. Take a look. Okay, now that you know a little more about Archax and Smartlands, let's go to London. That's where I'm joined by Matthew Pollard, the co-founder and CFO of Archax. Hey Matthew, it's great to be speaking with you.
Hi, how are you doing? Thanks for having me.
We're great here. Also joining us in London is Arnoldas Nauseda, the CEO of Smartlands. Arnoldas, thanks to you for joining us as well.
Thanks. Hi, thanks for having me here.
Now, before we begin, can each of you guys tell me a little more about yourself and your respective companies? Let's start with you, Matthew.
Sure. So I'm one of the 3 founders of Archax. My main role at the company is the CFO, where I look after all the numbers and the budgeting and the treasury and the forecasting. And Archax is a startup business that's been around a year and a half, and we plan to obtain all the necessary regulatory permissions to safeguard client assets and to offer an orderly price discovery of regulated instruments in London.
Fantastic. Okay, what about you, Arnoldas? What can you tell us about your background and also a little bit about Smartlands?
My background is, I have a background in several industries, basically. It ranges from real estate, venture capital, private equity, technology, consumer businesses. And in the past 5 years, I was a full-time entrepreneur. Basically, I founded companies in technology, in robotics, in fintech. And now I'm fully, basically 100% into Smartlands. Smartlands, we are a tokenization platform, investment platform, where we tokenize real assets. So we are based in London. We also have offices in Kiev and Vilnius. And we have also FCA regulated framework where we issue security tokens in line with the regulations. And we also have a number of partnerships how we can basically tokenize and commercialize this technology.
Terrific. So both of you guys, Archax and Smartlands, you're based in London. So we talk a lot here about the environment in all of our cities in the US. Can you tell us a little bit about the state of the security token industry in London? What's the current climate like there? What do you see, Matthew?
Sure. So Archax has been around for a year and a half, and all 3 founders have spent the last at least 10 years on the buy side being regulated by the FCA. And so our experience since setting up Archax has been pretty positive. The City of London wants to be an innovative centre. By lots of metrics, it's the fintech capital of the world. With Brexit coming up, there's definitely an appetite for the innovation to stay in the City of London. So we've seen the regulator, we've seen the Bank of England, we've seen Treasury, we've seen companies in the City of London all take a massive interest in blockchain. And there was an FCA consultation paper that came out in January this year. And to see the regulator explicitly recognise cryptocurrencies and give them 3 classifications, 3 buckets. One was exchange tokens, so things like Bitcoin, used to exchange value, utility tokens, and explicitly recognising security tokens. So for us, it's a really good sign that London and the regulator are properly looking at this space. Hopefully that answers your question.
Yeah, no, that's exciting. What about you, Arnoldas? Are you seeing any kind of trends around security tokens? What's the environment like?
Yes, I see a lot of actually movement in the space as well. So in addition to Matthew's points about the regulator is really very progressive. They have also the sandbox programs. So in sandbox, there are many companies going and testing basically the blockchain products, technologies, etc. So that's very positive in that sense. I see also a lot of conferences in the crypto and blockchain space, a lot of meetups as well, which is organized by lawyers, by various ex-financial people, basically financial institutions. So there is really a big traction in one of the biggest financial centers in the world. And we've chosen this jurisdiction for our business as well as one of the most reputable and progressive and innovative and friendly environments to do the business.
Yeah, it's exciting to hear. I now, both of you guys, Archax and Smartlands, have been in the news recently because of a partnership. Matthew, why did you guys enter into this strategic partnership with Smartlands for their property-backed security tokens?
Sure. So, as I've said, we're building a regulated venue that will list regulated instruments, And so as part of building that venue and building our business, we want to know that we have an exciting pipeline of quality assets that we will list on our regulated venue. And so engaging in partnerships with exciting companies like Smartlands is a very natural part of our strategy, because we want to have the best quality assets on the venue to attract customers to our venue. So that's why we've done this. We see the work that Smartlands have been doing in London. We see the attention to detail, especially around the regulatory framework of the offering, and we knew that they would be a great partner to sign up, so that we can have their current offering and future offerings to be listed on our venue.
And Arnoldas, can you talk a little bit about why Smartlands chose Archax for your STO?
Yes, so as we all know, the tokenization is about liquidity. Liquidity is a key driver of this space. So basically, we need a secondary market in order for this industry to move forward. So we basically analyzed all the European exchanges, and we also basically explored what are the existing exchanges in UK, which are FCA regulated, which with a good team, with the execution, and we chosen Archax as our partner to list our security tokens, and that's a great I think fit for us. And we collaborate, we partner, and we move this space in London. And we also, the other reason was that we would like to have all the, basically from the issuance to the exchange, to have FCA regulated, which is, one-stop shop. When the people go and invest in security tokens, they see the reputation, reputable companies from the whole value chain, and which is all compliant and regulated in UK. So that was, again, one of the key decision criteria to decide to partner with Archax and move forward with the listings.
Yeah, great. Okay, so Arnoldas, recently Smartlands tokenized essentially the first tokenized property in the UK, a $12 million student housing project. Can you tell us more about this STO? How much is it looking for? Who can invest, et cetera?
Yes. We believe that we are the first in UK to tokenize the property. So the property is 12 million pound sterling property based in Nottingham. As you know, Nottingham has two universities, big universities, which were one of the best in the UK, I would say, and one of the top leading in the world. So there are more than 60,000 students, and there is quite demand from all over the world to go to these universities. And at the moment, in the market, the situation is that in this city, particular, there is a shortage of student accommodation. The council, I think, issued that there is a 6,000 basically a shortage of the student accommodations. So, and also, we talk about student accommodation. We chosen this alternative sector from real estate as one of the key sectors which has the interest from the institutional investors as well. So it's the indication. And during the recession, it's also been doing great, this sector. So it's kind of a good business case to start from the business point of view and also the location-wise. So the people can go on our platform, they can go through the KYC in 5 minutes, and they can basically register and buy the tokens. And so, the people who are willing, they can go on our platform, smartlands.io, and see more details about this offering, what is offered, the documents, the investment memorandum, etc.
Great. Okay, so looking at a little bigger lens, can you guys discuss the tokenization of real estate in general, how you feel this can transform, say, the financial and commercial real estate industry as a whole? Why don't we start, Arnoldas, you're on a roll. What do you think about that?
Yes. So I believe that the tokenization can involve this for the investors and also the asset owners. So, one of the things is that it's a frictionless process, can open efficiencies. So we perform the issuance and also liquidity trading on the blockchain. It can basically disintermediate and remove some intermediaries like brokers, maybe banks, etc. So there is advantage, efficiency in the value chain of asset management, investment management, where let's say there is acquisitions, portfolio management, reallocation, then listing, etc. So the asset firms, they suffer from illiquidity. They basically buy the property for 5-10 years. They keep in the portfolios, and by tokenizing these portfolios, we can unlock some of liquidity, where the asset managers, investment managers can basically, having this tokenized asset, can go and basically sell digitally fractions of this property. And the other, let's say, asset owners, they can acquire. So they can have the extended portfolios with this type of product. And for the investors as well, we can unlock some of the global capital capacity, where investors, by, let's say, paying for security token in cryptocurrencies, we allow, for example, on our platform to pay by cryptocurrency for security token as one of the payment form. So that allows and unlocks some of the capital from, let's say, from Asia, from other countries, which there is, let's say, high barrier to enter this institutional grade of investment. So they can basically buy for £500 the fraction of the institutional level ownership and access this, so we can unlock some liquidity, unlock some additional capital for this type of, for this industry.
Great. Well, Matthew, anything to add about that, the large-scale benefits of tokenization?
Sure. So before I set up Archax with my co-founders, I worked for an institutional asset manager, and half of our $1.4 billion assets under management were in real estate. And so the kind of the enhancements that can be brought to capital formation of any kind, it doesn't need to be real estate, powered by distributed ledger technology, are very, very exciting to me, and one of the main reasons that I'm in this space. So the innovation of using distributed ledger technology to fractionalize an SPV or a balance sheet of an SME business, or any kind of vehicle that would hold assets in the traditional world, it can be done in a much more efficient way. So the process of raising capital, the process of, once that capital has been raised, fractionalizing it into a unit on a blockchain, having that unit on a blockchain exist and be used for secondary trading on a regulated venue like Archax. And also from an issuer's point of view, so from the entity that's wanting to raise the capital, the efficiencies brought about throughout the life cycle of that token existing, so distribution of dividends, corporate governance, voting, things like that. It's all made more frictionless. It's extremely exciting, and Archax is building a regulated venue that will be able to list assets from all around the world, that'll be bought and sold for regulated secondary trading and price discovery through customers from all around the world. It's an extremely exciting time, and you can prove the theory. You can make the argument to investors, to buyers, sellers, to regulators that this is a new wrapper, a new way of delivering traditional asset classes that's a lot more efficient, and in the end will benefit the end consumer. You can stand behind the argument that if a real estate property developer had traditionally issued a bond that would yield 10% in a traditional manner, and you took the whole process and lifted it and issued it on blockchain, and it exists on blockchain and trades on blockchain, and the dividend is distributed using blockchain, that the end consumer gets a better deal. And that is what's most exciting to me.
Yeah, it is. So what do you guys think about the role of sort of what we call here the Main Street investor, in terms of, do they get a real benefit out of this whole blockchain revolution, you know, the non-accredited, or do they have a role? I know Archax is very institutionally focused, I think, to your credit. How do you think the Main Street investor plays into these things?
Well, Archax is going through the process of trying to become a multilateral trading facility in Europe. That means we can face off against regulated brokerages who they themselves have retailer customers. So retail can benefit from it. It's as simple as that, really. So we in our MVP will not directly face retail, but we will face institutions, sophisticated, accredited, and also regulated brokerages. And so that's how retail could theoretically have access to the regulated instruments that list on our venue.
Arnoldas, what do you think about the role of retail or Main Street? Is this whole industry going to break open a new horizon for regular folk, or is this going to be something that just sort of the already wealthy can just get access to better quality deals?
Yes, so in our case, we already opened with this first STO. Retail investors can invest from £500. So we already opened access to, let's say, institutional level building real estate piece. So they already have. But talking about mainstream, I think one of the key things is to educate investors and for them to understand what is this. So we have to put in the people's language what message, what is the fractional ownership, what is security token. I think that's one of the key challenges, what we see to educate them, to build trust about this product and this offering. Until it becomes mainstream. So I see mainstream maybe 5-10 years from now, and at the moment there would be education, and early adopters will jumping on this wagon to test and then to experience while the basically companies building products for the issuance, for the secondary market, and etc. So in our case, we have a security token which is issued on our backed by property. Then we're building in 2 months, we'll have the secondary market, which is a bulletin board. So the people will be able on the P2P level to exchange the token. So that's about changing the ownership and fractional ownership. So at the moment today is a physical ownership, so you need to go to notary, etc. But here on the secondary market, people will be able to instantly change the ownership, which is very disruptive. And at the moment, the fees of changing ownership is about, let's say, from 2 to 15%, depending on the country. So it includes notaries, it includes brokers, and etc. And here on secondary market, you will be able to have access to number of properties and to have digital exchange ownership matter of below 1%. So that's disruptive, that's revolutionary.
Absolutely.
Just to add a little bit more to your question there.
Sure.
Obviously over there in the US, you've got Reg A+ type filings where you can accept retail up to a certain number. Over here in Europe, we have the prospectus directive that countries can choose to adopt, and companies can raise up to 8 million euros in a retail-friendly way. So here in Europe, we have a framework that allows capital formation that includes retail. And so when you combine that existing framework with distributed ledger technology and issuance platforms like Smartlands, it becomes extremely disruptive and very exciting.
Yeah, agreed. So here, speaking about, let's say, some regulations, we have the SEC has cracked down on ICOs, obviously, which means anyone launching an STO has to abide by, very rigorous set of guidelines. What are your thoughts on the regulations over there in London and even globally? How is that evolving? Does it need work? Is there things you see that need to be changed? Arnoldas, what do you see?
I think that, for example, in the US, it's heavily regulated, maybe too much. The token, when it's issued, is locked for 12 months, as far as I know. And we here in the UK and Europe, we have really a friendly regulation. So the regulators are very, how to be approaching and, approaching the innovation. Basically, they working with innovators. They, as I mentioned earlier, there are sandbox programs, etc. So they're testing technologies, they're changing the laws, issuing new legal frameworks, how to work with these technologies. So that's a good regulatory environment. We have some additional forefront runners like Switzerland, Malta, Gibraltar, Singapore. It's not so much, but it's moving. So I think we in London here, we in very good environment from regulatory point of view. So I think we will be able to move and develop our business here in this jurisdiction.
Matthew, what do you think about the environment, the regulatory environment? How's it shaping up?
For me, it's very positive. I'm biased. I'm from London. I've dealt with the regulator, but to put as simply as I can, you can attract retail money, and you can put together an offering memorandum, and you can attract money from accredited investors, whether you're doing it traditionally or using distributed ledger technology. So that's clean and clear and tried and tested. And then you've also got regulators across Europe in different stages of understanding distributed ledger technology, different stages of putting different bits of legislation, either announcing them or passing them. And you have smaller, faster moving jurisdictions like Malta or Gibraltar. You have countries like Switzerland who are doing incredible work. So it's a pretty fertile space over here, and I think a lot can be done. Like, a lot of innovation is here, and I'm very happy to have based Archax in London, based on the feedback from the regulator and the current feel for the regulatory environment, and also the tone set by the Bank of England. Yeah, there's, London and Europe is open for business, and from a UK point of view, I definitely think Brexit can be seen as a threat in some ways, but I also think it's a massive opportunity.
It's a fascinating time. I mean, what a turning point in all different ways for London. My goodness. Yeah. So you had mentioned liquidity for a moment a few minutes ago, and I think that's a real sort of important concept that has to do with, obviously, the promise of STOs, security tokens in general. Where do you think we are in terms of the availability of liquidity or the prospect for true liquidity? Matthew, what do you think about that?
So my take on this is just putting something on a blockchain doesn't introduce liquidity to the underlying asset, but what it does do is if the asset has historically been held in a more illiquid structure, such as a venture capital fund or a private equity fund or an SPV that locks up the investor for 10 years, if you change that structure and you introduce fractionalization using distributed ledger technology, all of a sudden you're introducing the optionality of liquidity. You're introducing the chance of liquidity. And then when you take that token and you put it on a regulated venue for secondary trading, that's when you start to lay the groundwork for true liquidity. So what this space needs, as far as I'm concerned, for proper depth and proper liquidity, is proper regulated trading venues all around the world, but most importantly, people to buy and sell these things, which means regulated venues need to play ball with regulators to attract all levels of sophistication to the venue as possible. And when I say that, you need to build a regulated venue that has assets on it that people are interested in, and Smartlands are playing their part in that. And then that regulated venue needs to be able to be plugged into by banks, institutions, funds, market makers, regulated brokerages, top to bottom levels of sophistication and participation and frequency in the market to give this space the best chance of reaching the holy grail of liquidity.
Yeah, and it feels like we are finally moving in that direction if we're not quite there yet. So what about product announcements or some news from Archax? Anything you want to share?
So our most recent announcement is we have signed to partner with a custody provider called Unbound, who are based out of Israel, who are an extremely innovative custody provider based around the concept of multi-party computation. Don't ask me to explain it because I won't do it justice, but it's another way of keeping keys safe. Right. It's a scientifically proven, rigorously tested way of sharding keys, that will allow Archax to custody our clients' assets in a safe way, but also will allow us as a venue to be protocol agnostic. So that's our most recent announcement. We are partnering with Unbound out of Israel.
That's a big deal. That's a big deal. I think that's one of those sort of micro issues that the average Joe doesn't really comprehend as being so frictiony in this process, is the custody and how to tackle that. That's great.
Absolutely. And the kind of conversations that we're having with the regulator are, how are you going to keep your client assets and your client cash safe?
Yes.
And so client cash are, we announced a few months ago, we have a banking relationship with Clearbank here in the UK. They are a clearing bank. That means our clients will give us their GBP. We will put their GBP with Clearbank, who put it with the Bank of England. So these are the kinds of things that we're building here at Archax, is to be as institutional as possible.
Yeah, it's exciting. And again, I said it earlier, but I think it's to your credit that you're focusing at the institutional level, because I think ultimately, if that doesn't move, nothing is going to move. So we'll be watching you carefully for sure. Now, what about Smartlands? Anything happening with you want to share about Smartlands?
Yes, I want to share that this year what we're planning, we recently announced Ambassador and JV program. So by launching this, we are looking all around the world for the individuals and maybe also the digital and the investment banks, maybe ex-bankers who would like to become a part of Smartlands and leverage their investors network and leverage their pipeline where they can contribute, so we can build more investment capacity and tokenize more projects through our platform. So also in a couple months we plan to open a sort of secondary market, which is not exchange, but it's a sort of bulletin board where the people, token holders, token investors will be able to exchange the token on the P2P level on the swaps. And that's we've been validated by the market, by the stakeholders, because true liquidity is not there yet. So we're creating a sort of semi-liquidity by launching our secondary market as a bulletin board. We also have in pipeline several more assets to be tokenized this year, and we recently announced our roadmap for the 3-4 years ahead. What are our plans till the mainstream hits the security token space.
Fantastic. Okay, so here we've dealt with, at the Security Token Academy, virtually everybody, it feels like, in the securities token space. But we like to hear about what are the companies that you guys are working with, who you've put your faith in to help you get to where you're going. Matthew, can you tell us about some of the companies you've been working with to get your goals met?
Sure. So as any startup business will know, you have to balance raising money and then building it in-house with going and partnering up with somebody to reduce your time to market and ultimately get you a top-tier product quicker, and that you would take a lot more time to get there yourself. So some of the announcements that we've made since we started as a business, we have an exclusive partnership with a regulated MTF in London called Aquis. They represent, 5-6% of pan-European equity trading volume, and they themselves are a regulated venue. So we have their matching engine technology, we have their expertise, and we have a wonderful relationship with them. So they were our first partner, and they've been with us for lots of this journey. And then a second partner we have is around our order execution management system. So we as a regulated digital venue will be giving our clients their own portal to trade on our venue, as lots of crypto exchanges do. So we've tried to replicate the experience. So we're calling it a prime broker style experience, where our customers will log into our venue, they will deposit their assets, and we will give them a trading view to buy and sell the regulated instruments that are listed on our venue. So some of the plumbing and some of the development of our own order execution management system is with a partner called Quad Financial. So those are two of our main partners, and they've played an integral role in helping us build out our offering.
Yeah, it's great to hear about the process that you guys go through to make that. I guess we used to call the build versus buy, decision.
Yeah.
Arnoldas, do you? Oh,
and
sorry.
You can
yeah,
kind
Matthew.
of. I'm just saying you can kind of come down on both sides, and you just kind of have to make a decision and run with it. And obviously, you're talking to investors, you're talking to stakeholders, and everybody's got a point of view. But we think we've come down on the right side of it.
Terrific. Arnoldas, any partners you've been working with to get where you're going?
Yes, without partnership, I think it's hard to move this industry. So we're using the blockchain, Stellar blockchain. So our first partner was Stellar Development Foundation. And then we have, they support us and play integral role in our offering, in our protocol, security token protocol. We have also Colliers. Colliers, it's a multinational real estate company. So we collaborate with them. They support us with the real estate services, or what are on the list for the real estate companies. We have also on FIDO, they play KYC role. We have them on board as well. We have what else? We have also our partnerships business development position. Basically, we engage in various in ecosystem stakeholders of security token ecosystem, and there are some also security token alliance, and we are part of the crowdfunding network association. So, and behind the scenes, we are talking with the various investment banks and asset managers, and maybe we'll be able to announce soon some of the multi-billion asset manager where we will enter into a research paper and basically go into the business case, how we can basically approach and tokenize and leverage asset manager with our tokenization solution. So we've been continuing working on the partnerships to deliver and grow us faster and bigger.
Yeah, it takes the whole community. It's fantastic. So looking at the big picture in the future, what challenges do you guys think still exist and need to be overcome for the security token, call it industry, to thrive? Matthew, what do you think?
I think we need to see. I think we need to see the number of tokenizers that are being created start to look at their pipeline and look at the assets that they're bringing to market, and look at how they're structuring those assets and what the underlying asset is, and if it's something that is genuinely offering the end consumer something different and something that they couldn't get from traditional finance. So I think that's something that we're going to start seeing this year. I'd like to see more assets issued. I'd like to see more interesting assets issued. I'd like to see more interesting structured assets issued to really make a more compelling proposition for retail investors. I also think for this space to start to build on the foundations that have been laid over the last 12 months, you'll need to start seeing regulated exchanges pop up around the world. And then when that starts happening, the distribution will start to be built out. And then all of a sudden, you've got a front-to-back ecosystem where you've got assets being issued that are interesting. You've got places for orderly price discovery all around the world. And you've got people that have the right channels from regulated brokerages, even companies like Robinhood and Free Trade here in the UK who have app-powered retail portals, starting there, going all the way up to hedge funds, bank trading desks and market makers. That all needs to be built, but we are moving in that direction of travel, and so it's really exciting.
Slightly different question for you, Arnoldas. What do you predict for the rest of this year, the security token industry in London, and then maybe around the world if you want to get bigger picture? What do you think?
So we already in the half to this second half of the year. So I think that there will be no dramatical changes. I think there will be evolutionary development in the space. There will be new exchanges coming up. There will be new issuances in the space. There will be maybe exciting issuances where there will be a willingness to invest and try these kind of offerings. That's what we are trying to offer with the next several projects. And within next year or so, I think it will be a good, strong foundation to develop this market further on and tokenize and have a liquidity for illiquid assets and interesting financial products.
It was great speaking with both of you today. Thanks again to Matthew Pollard, co-founder and CFO of Archax, and thanks to you, Arnoldas Nauseda, CEO of Smartlands.
Thank you.
Thank you very much.
To learn more about Archax, visit archax.com. And to find out more about Smartlands, visit smartlands.io. To view this interview and many more, go to our website, securitytokenacademy.com, click on the Interviews tab, and select STA Video Interviews. For everyone here at Security Token Academy, I'm Adam Chapnick. Thanks for watching.